Hey guys, second video on footprints, and we're talking about patterns that you can trade. So this is by far the more important video of the two, but you need to watch the first one in order to understand how footprints actually work. Now start right from the get-go. The first pattern I want to talk about is unfinished business. Now, if you look at a normal candle, and again, we're looking at the ES June 1 minute volumetric bar. If you look at a normal candle, you will notice that usually on the bid and on the top we have a 0, and on the ask bottom we do have a 0. So this is considered to be finished business. However, sometimes, not a lot, but sometimes you can see that the bid right here, it's not a 0, it's actually a 6. Same thing right here, we have a 31. And for example, looking at the ask right here, we have 22. So instead of 0, we have a 22. Instead of 0, we have a 31. Instead of 0, we have 6, and so forth and so forth. The general idea is this. This is called unfinished business. And the thought is that since we're not 0 on the bid or 0 on the ask, there's some resting orders above and below that the market is going to try and test, return to those, and then proceed with the direction it wants to proceed. My thoughts on this. If you try to trade it, you get your account busted in a matter of days. The reason why is there's software out there, TraderDale, Trader Analytica, I think have it as well. Order flows, different software vendors that you can add on to NinjaTrader. They have the capabilities of charting this automatically, and the entire chart will be filled with lines. Now I've tried them all pretty much, and it's the same concept everywhere anyway. So the entire chart will be filled with lines. It's just untradeable. So that is unfinished business. The normal state of the candle is 0 on the bid, 0 on the ask at the bottom, 0 on the bid at the top. That's it. There's something going on if it's not, but it's not that important. Far more important is the second pattern I want to talk about, and it's called exhaustion. Now, exhaustion happens when you have an imbalance at the top in terms of an ask and 0 here, or an imbalance right here on the bid, 0 on the ask at the bottom. Not always, but most of the time, this will signify reversal in trend. And what we mean by exhaustion, we mean that there are no more sellers right here at the bottom and no more buyers here at the top. Now, obviously, that wasn't a perfect example, but I'm not trying to, fit anything into, so it's an amazing pattern and go ahead and trade that and I'm the trading guru. No, nothing works all the time, but this is just a general idea. When you see imbalance at the bottom, huge imbalance like this, that means sellers are gone, no more to be seen. So market price will tend to reverse. Same thing happens right here. But however, as you can see clearly in this case, this was not the case. So the price just continued. But this is what this pattern is all about. Now let's try to find one or two more examples. If we spot them, fine. If not, just go ahead and look for other things. And I'm trying here. Now, since I'm not seeing exhaustion, and maybe we're going to get some exhaustion somewhere else, I want to talk about the third pattern, which is initiation, and it's pretty much the reverse of exhaustion. So every time you see an imbalance right here at the bottom, usually happens not at the 0, obviously, it's going to be 0 if it's finished business, so it's not the 0, but the second candle, the second level. So the second level here, if you see imbalance to the ask, that's initiation by the buyers. The same thing here, you see the second level right here on the bid, imbalance, that's initiation by the sellers. So sellers are trying to push the price down. And by the way, right here, we do have an exhaustion. Let's see what happens with price, and just delete those. So you can see we had a small rejection right here, this exhaustion, but price ultimately resumed its way up. So as I said, speaking about initiation, so here are some initiations. Sellers initiate here, sellers initiate here, buyers initiate here, buyers initiate here, here. Obviously, it's very strong in terms of bullish bias, this one. But then we're met with sellers initiation right here, then price goes down. Buyers again. So this is a pretty common occurrence. I mean, the initiation, not so much as the exhaustion, but it's a pretty common occurrence. So these are buyers initiating and obviously sellers initiating here. I don't trade those, but it's a good thing that you have an idea what those actually signify. Now, fourth one, delta divergence. And these are not so important ones. The actual really important patterns, I think four, but I want to go over all of them so you have an idea. So delta divergence. We were talking about the delta bar. So when price makes a new low on positive delta, this is not the case right here, but when a price makes a new low on positive delta, it said that we have delta divergence. Some people use this to counter trade, to trade counter trend. I don't. I don't find it that useful, but it's true. If you go over a chart with examples, you will see times that it works, times that it doesn't work. So it's probably 50-50 split. So if you find another edge or another filter to add to the delta divergence, it might work for you. I haven't, and that's why I don't really think it's beneficial to me. But anyway, so here's delta divergence. We're making a new high. Obviously, that's the high. Delta is negative. We're making a new high. Obviously, delta is negative. Let me just look at delta close. Delta close, it's minus, 810. So obviously, new high, delta is negative. Making a low, delta is negative. That's fine. What else? What else? Making a new low, delta is positive. Is it a low? Well, it has to be a recent low. It doesn't have to be the low of the session, the low of the day, the low of anything. It just has to be a recent low. So I would consider that to be a recent low on positive delta. Maybe you can, get yourself a very nice long right here. Right here, this is a low. It's a negative delta, so this one is fine. This is a high. Delta is, what is the delta? Oh, we're stuck at on my data box. I think my data box, my data box is stuck. So obviously, I don't know. But does that look like positive delta or negative delta to you? I don't know. It doesn't really matter. You get the point. So positive delta, negative delta, making a high. That's delta divergence. You can short if you're, using delta divergence as a signal. It's really a very simple thing to have in mind. So you might want to be just looking at it. Now, pattern number 5, stop runs. Now on this one, we're going to have to look at the chart because it's a little bit complicated to actually spot this. And basically, what we're looking for, at the end of the run, this one could potentially be a stop run. Now, what is a stop run? So we have a bunch of imbalances on the top, not just one level. So remember, one level right here and 0, that's exhaustion. But if we have a bunch of imbalances, so we have like this 37,208, and we have zeros, preferably I would choose 3 levels at the minimum for a stop run. But given the fact that we also have 0 here, we also have 0 here, we have an 8 here, I would consider that maybe there were some stops right here that were taken out, and then we found ourselves into an absorption zone that we're going to be talking in just a minute. So we're looking for either the bottom or the top of a current range, a swift move, a few levels of imbalance. If it's on the top, we're looking for buying balances. If it's on the bottom, we're looking for selling balances, and zeros. Let's see, this one, no. So remember, looking for a couple of zeros and imbalances. Admittedly, you'll see way more of those on the NQ. When we trade live, I'll have the bookmap chart right here, and side by side I have a few candles of order flow, meaning footprint. So we're going to see live examples when live trading starts, but I don't see anything going on here, so maybe not. All right, stop runs. I saw a sweep. That is another pattern that I want to talk about. So I saw sweep. So let's talk about sweeps first, and then we're going to switch to NQ and see if we can find something there. It's far more likely we're going to see a stop run. Now, sweeps are very similar to stop runs, with that exception that the sweep is the #1 priority in the order book to get filled. So if you have a sweep, if you want to sweep the entire book, meaning that you want to buy such an amount or sell such an amount, that you're going to take a few levels of the order book to get automatic priority. So sweeps come first. Then we have market orders, we have stops, but sweeps are always first. So in essence, if you think about it, it's a huge trade. Look at this one right here. So it's a huge trade, a lot of imbalances. We might have had stops here. We don't know, not by looking at footprint. If we had bookmap, I'll tell you, yeah, there's a stop. Obviously, bookmap has the indicator for stops, and it can read the algos, and it knows what's going on in terms of the book and the order flow. Right now, we have to guess whether these were stops or sweeps. It's a sweep for sure. So not all sweeps are stop runs, but all stop runs are sweeps. So basically what happens here, somebody's aggressively buying, and since there's absolutely no response on the other side, it's just pushing price higher and higher and higher and higher. This is also very much happening when there's a breakout. We have buyers and no sellers, so pretty much everything is getting filled on the ask and price just shoots up. So remember, when we're talking about breakouts, I know there's a lot of breakout traders. When we talk about breakouts, many people will tell you have to have massive volume. Not true at all. What you actually have to have is volume on the side that is breaking out and complete lack of volume on the other side. So there should be no response from the market. So even if I have like to buy, let's talk about stocks. If I want to buy 10,000 shares, if there's nobody to sell those 10,000 shares to me, I have to push the price up because I'm aggressive. Remember, I'm talking about aggressive market participants. I'm hitting the market buy. And since I'm hitting the market buy, I just want to get filled. And I'll get filled on the next price up. So ask is going to be raised until I'm actually finding the liquidity that I need to fill my trades. So this is a sweep. Now let's see if we can find some more. And if we can't, so we have to talk about sweeps, then we have to talk about absorption and stacked imbalance. Okay. See if we can find some more sweeps. So remember, just a very abrupt push down or push up. So right here we have exhaustion. All right, there's another sweep, obviously. You can see that's a very fast sweep to the upside right here. You see a couple of levels of imbalances. So it's 1, 2, 3, 4, 5, 6, 7. Then one missed, then 8, then 3 more. Obviously, that's a sweep to the upside. So aggressive buying. And look at the other side. We have 1, 2, 23, 17, 2, 5. I mean, it's just going mad here. So that is a sweep. Let's see if we can find some more sweeps and hopefully a stop run here on the ES. If not, I'm just gonna switch to NQ and I'm gonna show you. All right, so that's a very small sweep here. Nothing really impressive. No stop runs. There's pretty good sweep right here. It's a small one. Buyer's initiation at the bottom. Right here there's a sweep. No stops, however, but it's a small one. I mean, when you see like when you see 5, 6, 7, 8, 9, 10 levels sometimes, like right here. All right, so look at right here. Obviously sellers are in control. Look at what happened here. So it's a sweep. It's a very fast move down. There's absolutely no buying on the other side. Or just move down. Same thing here, but to a smaller extent. Right here again, a sweep. And unfortunately, I don't see any stop runs. So let's switch to NQ, and you'll also see one of the challenges trading order flow on a footprint chart with and there's a stop run. So just a second and I'll zoom it in. That is one of the difficulties trying to trade footprints on NQ. The problem comes from a very simple thing. Right here on the right side, of course, you have the scale, the price, and remember, NQ is trading the same spread size, like 0.25 as the ES. However, ES trading is 5,000. This one is trading at 18,000. And the range for this is like 200 points a day. The range for ES is like 30, 40, 50 points at max, right, per day. So obviously, if this is trading 200 points per day and we have 4 ticks per point, that means we have 800 lines that if you have a chart like this, and this is like half of the daily range, for example, you have 800, divided by 2, obviously 400 lines of text that have to be visible for you. So I have a little trick when I'm trading. My NQ chart is like this, right? But if my NQ chart is like this, you're able to see because the range is smaller, because this is automatically setting the range for me, right? So If I have like this, it's much harder to see. Never mind, we have a stop run and a sweep right here at the bottom. You can see like this is imbalances, right? Obviously, it's hard to see, but you can obviously see. So let's see if we can zoom in on this bar and then do our little trick. All right, let's just do our little trick. See if we are going to be able to see that. Where did it go? Come on. Did I lose it? Yeah, it's right here. All right. There's another sweep and a stop run here. Okay, you see now we're starting to see something right here. Starting to see something because the range is getting smaller. All right, so let's do one more. So you see what happens? I think that's visible. Yeah. All right, so you see what happens right here? We have imbalances and we have zeros. All of these zeros, that's a stop run. So it's a sweep, obviously, as I said, it's a sweep, but it's also a stop run. So let's just explore a little bit more and see the other one. Obviously, right here, you can see again, we have the zeros, we have the imbalances. So that is a stop run. So now we know what is a sweep, what is a stop run. We have two more things to talk about. The first one is absorption, arguably the most important thing that you're going to be looking at when we're talking about a chart in terms of footprints, and stacked imbalances, one of the most important things. Now, here is a disclaimer that I want to make. If you're familiar with ICT, I'm not a fan, but I'm just saying, it has those fair value gaps, whatever. I don't know who came up with the term, but what the fair value gaps actually are stacked imbalances. However, the problem is that not always a fair value gap is a stacked imbalance, but always a stacked imbalance is a fair value gap, is a zone that the market will retest. And we're going to take a look at the fair value, well, the stacked imbalances in this case. Let me first talk about absorption because I think that absorption is actually a little bit more important than that. And by the way, right here, we also have a little bit of a stop run. It's only two levels, but you can clearly see two imbalances on zeros, and then we have 1, 2, 3, 4, 5 zeros on top. Clearly, a stop runs with imbalance. Anyway, doesn't really matter. It always happens at the end, right? So, what is absorption? Well, let's look at normal price action. Price starts from here, and we know that darker shades of the candles means that the delta is relatively small, right? There's no elevated delta. And then suddenly when price goes down, you see elevated colors, meaning that brighter colors are hitting the market. That means liquidity is coming to the market. When you see that, you know that somebody's either supporting the price, right, or just trying to get on the other side. So right here we have delta, delta. You see this is very dark. We have delta. This is dark. We have delta right here getting brighter. Now let's look at a more extreme example. For example, right here. So, or even that one. So market's moving up right here at this consolidation, little triangle, right? We have some colors and you can see them clearly. And then right here at the top, we do have a lot of delta coming in. Now, you would ask, all right, well, that's supposed to be buying delta. Well, remember when we spoke about delta, we said this is delta and it depends on where the trades are filled. So if the trades are filled on the S, delta is going to be positive. They don't know if behind this was a huge iceberg, sell iceberg that just got filled because it was sitting here on the S and all the buyers went into the iceberg, that is a sell iceberg essentially, but all the buyers went here, and when the buyers were depleted, price started coming down. So you don't really know. That is why it's incredibly important. And if I was actually long right here, I would be really careful what's going on because this is not good when you're trying to break out. So look, this is a breakout candle, which is actually good. This one right here. There's not a lot of, trading going on this side. There's imbalances on this side, but there's not a lot of trading right here. And even if you don't see the numbers, which I'm telling you, you don't really need to see the numbers. As long as you see the imbalances, you see the background color that is actually dark, it's not bright, so no liquidity is coming to the market, you're safe. Now, I'll be very worried about this one right here. So we broke out, obviously, above the point of control here. So we continued. There's some imbalance right here, but then we have volume right here. So I'll be thinking, all right, maybe I should scale back. Maybe I should take a little bit of my position or whatever. Good thing is that it's not granted, and price went up. But basically, absorption, as I said, the important part is for you to understand that we need to see volume in order to have an absorption. So volume and absorption actually the same thing. It just means that the market found liquidity. When the market finds liquidity, it stops. Not always reverses, but it stops because this liquidity needs to be absorbed, needs to be exchanged between buyers and sellers until we find an equilibrium in the market. And as soon as this equilibrium is broken, we have a breakup or have a breakdown until we find the next liquidity zone. It's a very simple concept. Bookmap is perfect at exemplifying this. So you see, market goes up, we have some absorption right here. Market goes down, again, market breaks up, sweep. Obviously, you can now spot the sweeps. It's in the middle of the candle, it's imbalance. Obviously, it's a sweep. We have, I don't know, like 10 levels, and then we have liquidity right here at the top. This brighter level right here, that is the liquidity hitting the market. This means at the end of the run, if liquidity shows up, you either scale back, move your stop loss, take partial profits, whatever you want to do. I'm not going to say short here, obviously not. Just because liquidity shows up, that doesn't mean that the price will stop. But there's a good chance that the price, at least for a moment, will hold the move. Same thing right here. We were going down. Look where liquidity happens to be. Now, if you're thinking about this is only sell liquidity, you're thinking, all right, a lot of sellers are piling up. This is going down. No, this is just limit buy order sitting right here. All the sellers were actually absorbed, and our price is ready to move in the other direction. Then we have more liquidity coming up here. So market is not really sure what it wants to do. We do have that sweep in the middle, but market's not sure here with the volume. So, all right, it's a 50-50. And last but not least, we have the stacked imbalances. So you know what is absorption by now. Let's just switch to ES because it's much easier on the eyes, right? And let's just look for stacked imbalances. So basically stacked imbalances are two or more levels of imbalance right next to each other. Now let's say I'd prefer to see three or more. So 3, 4, or whatever levels. I would consider that to be stacked imbalance. So right here we have 3 levels of imbalance, and this will be considered stacked imbalance. Basically, a stacked imbalance is a level that the market tends to retest, and it will act as support or resistance, depends. Now, the native charting software for NinjaTrader is the volumetric bar. It doesn't have the ability to actually draw lines right here. But if you get an add-on, something like TraderDale or Futures Analytica or orderflows, the softwares there will make it possible for you to actually have those lines automatically drawn for you. So if you select 3 levels of stacked imbalance, they'll just draw it automatically for you. And it's really easy to see that right here, that imbalance actually served as some flipping zones, like a support and resistance. So it was resistance here, it was support here, it was support here, and price ultimately went up. So if I place my cursor right here, you can see that this acted like a flipping zone, support, resistance, support, resistance, support, resistance, until we've actually finally broke out. Now, they don't work all the time. Nothing works all the time again. But right here, you have imbalance on the top, and this acts as resistance right here. We come right into this zone, back, and we reject, and we go down. There's like imbalance right here. You can use that one, you can use this one, but it doesn't really matter. So stacked imbalance is just 3 or more. Let's check it as 3 or more levels of imbalance right next to each other, and you can draw zones of them. So absorption, stacked imbalances, these are the 2 most important things. You can also look at delta divergence, it's not bad. Sweeps and stop runs, much better in Bookmap than here on the footprint chart. Initiation and exhaustion, they happen very often, so it's really hard to keep track of those. And unfinished business, you know what it is now, but I think it's completely useless if you want to trade off of it. So one more thing before I go. Please, if you finished the video, if you like the video, subscribe to the channel, leave comments, turn on those notifications so you don't miss any more videos. and I'll see you at live trading. Hopefully, everything tomorrow will be okay with the stream, and we'll be able to be together for 2 hours from market open. So, see you tomorrow. Bye bye.